After more than 70 days of remaining shuttered down, India is reopening. Shops, malls, restaurants, and hotels have started operations. These are signs that the economy has restarted, although a revival may still be many months away. For instance, the number of trucks moving freight to 2.25 million in May, 2 to 2.5 million in May, which is nearly double of April when the country was in a complete lockdown. Likewise, generation of eway bills for the month of May touched 11.4 lakh per day in the last week of the month. Just to put things in context, the daily average of the whole month was 8.2 lakh, almost thrice of the figure generated in April. What does it tell us? The daily average of whole month is almost thrice of the previous month, means people have started moving cargo. Essentially, wholesalers have started moving cargo from the point of production to their warehouses. There's a caveat though. Though May's data has been rising, the data for the whole month are still only half of February, which is the pre-COVID-19 month, as the lockdown was lifted only on May 4, the last full month before lockdown. In April, the total number of eway bills issued stood at 86 lakh, which comes to 2.9 lakh per day, as against 13.2 lakh in March. So what does an eway bill do? Eway bills track the cargo movement under the goods and services tax. They give an approximation of inventory movements that might indicate wholesalers are stocking up on inventory in anticipation of demand. Just to explain, when will a wholesaler actually start moving goods into its warehouse? Into its warehouse only because if there are signs of demand in the retail, at the retail level. That is, a wholesaler will start moving goods into his warehouse when he or she feels that the people the final consumers will eventually end up buying more than what they were doing earlier. Now, as a fallout of the lockdown, a lot of stock could not be delivered to retail markets. The upcoming weeks, post-lockdown, could see unloading of perishable stock in books and clearance of old inventory. So there could be a bit of a pent-up demand that could be resulting in this sudden spurt. So we need to see how it plays out over the next couple of weeks. It is also expected there will be an increase in demand because retail shops have opened, malls have opened, and restaurants open, and hotels have opened up. So people are moving goods. Cargo movement of non-essentials have been completely opened up. So there is a possibility that retail demand will go up, and that is going to be the clearest metric of the economy restarting. And also the fact that e-commerce has opened up, and e-commerce opening up of non-essential goods is also a key contributor to the increased usage of e-way bills, which means e-commerce companies are actually moving goods from point X to point Y, which could be very far away. The distance between the two could be very far away, and they're moving goods because there is a demand for such goods, both at the retail level and maybe also e-commerce companies could be stocking up in warehouses across the country. So these are clear signs that the economy has restarted, which is different from a revival, because revival could still take a couple of weeks from now. But there also seems to be early signs of revival in retail demand. And here is a bit of interesting piece of statistic. According to reports, HDFC Bank expects normalcy to return within 3 months. So what does it mean? Well, in an interview to Mint, Arvind Kapil, retail banking head at HDFC Bank, said the demand for loans remain intact. That is, customers who are applying for fresh loans, that demand kind of remains intact. And this is evident from the way auto and two-wheeler loans have behaved. And what is the evidence? The evidence suggests that auto and two-wheeler loans have seen over 50% run rate since lockdown 1.0 was lifted in May. It should be noted, however, and this is the caveat that I also flagged right at the beginning, that a large part of this spike could also be an account of built-up demand, that is pent-up demand, and may not be reflective of trends for the coming weeks. So does it mean that people have started going out to malls and cargo movement have taken place and people will start going out to malls and start buying goods, and that demand is going to sustain? That is something that we cannot say at this point in time. But what we can say, that at least there are signs that goods are moving from the producers, that is the manufacturers, to the wholesalers through lorries and trucks across highways that crisscross the country. That's a good sign. But are these green shoots or scattered weeds? The next few weeks will hold the answers.